Welcome back, ladies and gentlemen. After an enriching inaugural session, may we now move on to our first panel discussion on technology and impact on experience, organizations, and skills. For this session, it's my pleasure to invite the eminent panelist to the dais, Shri Kalyan Kumar, Executive Director, Punjab National Bank. In his role, he heads the HR vertical for the bank as well. Shri Nidhu Saxena, Executive Director, Union Bank of India. His role also includes heading the HR vertical for the bank. Shri Om Prakash Mishra, former PMD HR, State Bank of India. He has played an active role in the industry wage settlement. Shri Srirang TK, Group Chief Human Resource Officer, ICICI Bank. Shri Vinay Razdan, Chief Human Resource Officer, HDFC Bank. And our moderator for the session, Shri Nitin Razdan, Partner Deloitte.
Thank you.
Over to you, sir.
Good morning to all the ladies and gentlemen who are here. Thank you all for your time. Of course, to our distinguished panel, again, thank you for your time. I think it's a real privilege because today we have the HR leaders of the most iconic banks in the country, both public and private sector. So very, very special gathering here. And when we talk about the topic of technology, most CHROs, HR leaders we've been speaking to across industries, particularly in the last few years, they've had a big role to play in how technology pervades across the organization and how it leads to value capture across the organization. And when you really break it down, there are 2 or 3 facets for the CHRO. I think the first is really preparing the wider enterprise for technology transformation. So be it the culture change around it, be it the jobs, the impact on org design. The second is really around reskilling the entire organization because there is a certain degree of digital fluency, net new skills required in the age of technology. And the third is, of course, the impact of the HR function itself, right? So how is technology helping HR as a function better serve its own customers, which is both business customers as well as employees? How is technology being used to create a compelling employee experience? And so there are lots of balls for the CHROs to juggle, and some of that is what I was hoping to unravel in today's panel discussion. And I thought it will be maybe helpful to start with Mr. Om Prakash Mishra ji. We understand that SBI has, of course, in the last few years, actually revamped the entire HRMS, and the whole employee life cycle is now tracked online, right from training needs to employee grievances. And considering your scale and your complexity and the number of legacy systems you had, can you enlighten us on how you went about this journey? How did you overcome some of the challenges which came with an initiative like this?
Good morning. So am I audible? So if you see the real journey of bank in our HR, not in HR area, they will recall our days in 80s and 90s when even a simple calculator and machine was not there. And the payment of salary was dependent on the head clerk of the branch. If he's absent due to some reason, he has gone on LFC, salary was not paid because the resource person is not there. I think I've not remembered any occasion where DA was paid in time. Circular came, then after 2 or 3 months, some arrear was paid by the bank, depending on time of the our head clerk or that department. Then bank thought of HRMS in 2009, where salary was fully automated in the first phase, and then all benefits, all staff benefits, allowances, incentive schemes, reward schemes, grievance schemes, all were integrated in HRMS in different phases. And now we can say that our total, right from onboarding of POs or clerical staff or any staff to till they die or even after their death, their family pensioners, everyone is a part of our HRMS platform. So all right from the insurance payment or medical payment or anything, now today we are on that platform. But again, we thought Now this HRMS, old HRMS is now not in sync with the current realities. Like one thing is scalability of operations. Due to the paucity of a space in server, at a time maybe only 6,000 people can sign on in the system. So during first weeks when people claim their allowances, now system crashes many times. In many times, suppose during promotion time, it is not open for claiming other allowances. Like suppose I retired 2 days back, but till 10th, I can't claim my allowances for the month of Feb because it is closed due to some other processing. In the month of April, due to promotion processing, it is closed for other benefits. So we are coming with a new HRMS platform, which is cloud-based, and all employees, even together, they can log in for all their benefits or for different benefits. That is one thing. And it is right, like it is also the very robust current one, but like it is fully integrated in the current technology of AI, machine learning, and analytics. Like today, a lot of employees write in Twitter and social media, maybe against the bank or in favor of the bank, because they don't have any channel to communicate with their employees. But in this current system, we have internal communication channel in this current HRMS where people can write their grievances also, their feedback also, suggestions also. Similarly, suppose my chairman wants to talk to only branch managers in one group, or lady officers, or RMs. There is no platform where they can talk as per the user groups. But in the current system, they can talk to the user groups, various user groups, as per their needs and requirements. So again, there is gamification in this new app where people can, not as a very tough system, but the people can also give badges or rewards or gems to maybe their peers, their colleagues, their juniors, their seniors, everything. So it's a concept of a 360-degree feedback. Based on that, again, we can see how many people are better on HR index, how many are slightly poor on HR index, or in any area as per the bank's ethical code. So a lot of improvement, again, as of now, since we have just inaugurated maybe 10 or 15 days, 10 days back only. So currently 35 facilities are available on that new platform, but I think by March 24, after 2 months, all 156 facilities will be available on this current HRMS platform. Challenge, as you told, one challenge basically is our data, because it's a very old bank. There are many pensioners where even the date of birth is not available in the system. A lot of data is not available in the system. So data cleansing is one challenge for us. Again, there are many people, family pensioners, subordinates who retired long back. They don't know how to use HRMS. This change management issue is also there. But the way recently, like last year, when we went for this online insurance renewal of our retired employees, I think 20% went offline, but this time only 6%, and 94% have gone through online mode in HRMS. So improvement is taking place, but one challenge is again adoption of technology, and second, data issues, especially among the old employees.
No, thank you for that, Mr. Mishra. And I think this is quite a case study in itself, especially given the scale and the legacy system.
And again, one challenge, Mr. Razdan, I'll forward it. Like if you see generally companies where there is 2-3 cadres, one cadre of maybe associates, this or in our bank there are a lot of, even in messenger, so there are not less than 20 cadres. In clerical staff also there are many cadres. Even for pensioners also, retired before this paper diet, retired before that paper diet. So everybody has different scales, different facilities, different DA structure, all these things. So it is very, very, very challenging how to make it in sync with all the guidelines for each and every staff, each and every cadre of the bank. Thank you.
Thank you for that. And I'll now turn over to Mr. Vinay Razdan from HDFC. And I know, Vinay, we've had a few discussions in the past, and you've always seen technology as a force for good. And you've been a big proponent of creating a culture of empathetic workplace, psychological safety. And I believe at HDFC, you've used technology to create channels for employees to serve, to play back feedback, and also two-way communication. So can you tell us a bit more about how you've embraced this at HDFC and the challenges therein?
Good morning. Audible? In the back? Okay. So my view on technology is very simple. it is a tool to be used because you should never get intimidated by technology. Advances will happen and breakthroughs will happen, and we tend to get into how the plane is built rather than flying the plane, which is the objective of a commercial organization. So from my point of view, technology in my own career, I have come full circle. I really think so because back in '88 when I started my career in ITC, there was a Burroughs 1800s server platform, which was the size of this stage. And all it used to do was to process payroll for 2,000 people. From there, the phones that we carry today has got n number of, more computing power and, all the things that it can do. So I think in the context of a scale organization, we are 200,000 plus people. There is no way for you to run and be in touch with any people system and be in touch with employees if you don't have a robust technology underpinning to it. So it's been a journey for us, and technology adoption is always a journey for us from various, we also underwent a change. We had a new HRMS platform that we introduced a few years back, getting the data integrity right, that's the starting point, to getting your core processes online, your performance appraisal on the mobile, for example, makes life very easy for people. Your learning platforms on the mobile, your ability to do, we do third-party external surveys to check the culture of the organization, to really actualize the aim of being a listening organization, to know what people are speaking and what they are feeling, and then the follow-up of that, how do we get back to them with our outcomes and plans and whatever. We also do multi-rater 360-degree kind of a thing, which is again externally managed through a third party for it to have credibility. We also do, interestingly, I think COVID, despite all its negatives, one positive thing that it did was that it hastened the technology adoption. Previously, your teams would expect you to physically visit a location. But I think acceptance of a Zoom call and our Teams call is far more than what used to be, 5 years back. And we use that very extensively to, to ensure that our communication strategies are in place. You do regular town halls and you reach out to people. Otherwise, it will be very, very difficult to reach to the nook and corners of the country. Also, during COVID, in fact, we leveraged that opportunity very significantly. We did a virtual development center initiative deployment, which covered about 18,000 managers. Anyone who's leading a team of 5 plus was, underwent this development center initiative. And to do that across the whole organization in a given time frame, you just can't dream of doing it without having a very, very solid technology underpinning. But having said that, the only thing I would like to say, and I'd like to end with that, is that technology at the end of the day facilitates reach, penetration, and connect and all those things, but human beings like to be in touch with other human beings. And from HR point of view, we should never lose sight of it.
Right. No, absolutely. I think Vinay very well summarized that despite all the technology, there is no replacement for the human skills, particularly when it comes to judgment, ethics, empathy, and then of course inspiring people and creating a larger purpose. That's something which the machine still cannot do at this stage. Another powerful application, of course, has been around reskilling, and I'll turn to Srirang here from ICICI Bank. And Srirang, we understand that technology has been really at the bedrock of how you've driven rapid reskilling and upskilling across the workforce at ICICI. So could you share some insights on that, please?
Sure. So first of all, thank you, Nitin, Deloitte, IBA for inviting me to this panel. It's indeed an honor to share stage with such accomplished professionals. I think on technology, you're right, and I kind of build on what Vinay mentioned. that technology, after all, is an enabler, and that's not an end in itself. So just to kind of take you back to when ICICI Bank was growing from its initial years in the late 90s or early 2000, when we were rolling out a lot of branches, we had to ramp up our human resources, manpower. Clearly for us, we could not have grown as fast, had we really dipped into the so-called ready talent from the public sector banks or multinational banks. For various reasons, we could not have grown only with that talent. So we had to necessarily go and, in some sense, look for talent across the market. So I would say for us, technology and training, in some sense, got married very early in 2003, 2004. When we figured out that for us to really scale as a bank, it's important to have a very strong learning platform. And I say this, that one of the reasons why I think we have been able to sustain the kind of growth that we've had is because we have a strategic platform that we've invested in, which is the learning platform of ICICI Bank, as early as 2004. So what it did is that it really enabled us to go out and hire, skills from across the market, not necessarily based on skills, but based on the quality of people, and then skill them into the institution. And that's how we could really scale. As you're aware, we also as an institution believe in moving people across functions. There have been times when we have scaled down a certain function, we've scaled up a certain function. So let's say for some reason we want to scale down unsecured business and move to some part of the other business, or from retail to corporate, corporate to retail, project finance to corporate. All of these movements have been possible because we have a very strong enablement of technology within the institution. We have, leveraged technology, but that said, as Vinay mentioned, I think training and skilling is a combination of, both technology-led learning modules and a fair bit of classroom. Because I see a lot of corporations today so excited about digital learning that they almost believe that you don't need classrooms. Or swing the other way around to say we'll do only classrooms because after all, people need to be connected. I think you need to have a healthy mix of both. As is true for most, I think, banks today. We've had a very strong technology, I would say, culture within the bank. In 2004, we had an intranet, and all our HR process today, from the time the candidate is onboarded to the time he or she resigns, and as Mr. Mishra also mentioned, everything today is available. More importantly, I think we have now leveraged mobile learning in a big manner. So that's something that's a technology that we've leveraged on. So how do we really provide learning in a manner which is convenient to people to learn on the go? I don't think we can claim success as yet, but clearly we know that's the direction we are headed. So for us, using e-learning, using simulations, using game simulators, and most importantly, we also have a very strong industry academia tie-up. So we hire almost 50-60% of our entry-level employees. And given that as a bank, we do suffer attrition also, and most private sector banks do have that as a challenge. So for us, it's a constant game of how do we ensure that the business continuity is managed by having a set of fresh people skilled, and how we have the existing people reskilled. And technology has been the only solution through which we could really scale it up.
Fantastic, thank you. Very insightful, Srirang. And again, I mean, for me, one of the key points of emphasis from Srirang was really the whole balanced approach towards learning, and the nuance here being it's not just about e-learning and mobile learning and technology, but equally how do you balance in person. It's almost like, when all of you as bankers say that we have to take an omni-channel approach to our customers, whether they're in a branch or whether they're on WhatsApp or calling on the phone or internet banking. I guess the same is applicable for our employees as well and their own learning journeys, having that right omni-channel approach to create great impact. So thank you for that, Srirang. Mr. Nidhu, I'll now move on to you. And I think for most organizations in banking sector and otherwise, when they first take this leap of faith in terms of investing in people-related technologies, one of the big challenges often is fragmented data. And often the data hygiene is not there, it's inaccurate. Data sitting in different parts and disparate systems, And so to really have one comprehensive view of an employee and their aspirations can sometimes be a challenge. And we understand that you've actually gone ahead and actually at Union Bank implemented a sort of portal which has become the bedrock of many of your talent decisions. Can you share some insights again on how did you go about this? What were some of the challenges?
Yeah, sure. Thank you, Nitin. I think the thought process behind was like it was mentioned also during the initial talk by some distinguished speakers, that HR is actually transforming itself from the simple administrative functions of hiring, giving placements and promotions. Beyond that, if HR has to look at today's environment, how the employee can be a strategic partner in the growth of the bank. So that was the driving theme for us to look at this particular thing. And what we realized that unless we don't have the complete profile, complete view on what my employee is, what my employee has in terms of basic qualifications, his work experience, his trainings that he has held in the past, his even capturing as to what job family, because there is a concept of job family where employee is given an option to select where are the 1, 2, 3 preferred roles that he or she would like herself to be if given a choice. So entire data, entire 360-degree profile of every employee is captured in this performance management tool, what we call as Prerna within the bank. So this PMS tool helps me take all data-based decisions. So what we realize that it is very, very important, especially when the organization grows large in size, it is actually impossible. You need to leverage on technology and to have control on things. So if you have this strong data with you, then based on this data, all your decisions, all your HR outcomes can come. So like for when I have this kind of information on each and every employee, that where he or she belongs, what are the preferred roles, what are the areas in which he or she has been trained, what are his work so far in the bank, and tomorrow when the organization has some requirements to post in some specific roles. So especially the posting tool of my Prerna portal will give me what are the probable candidates who can be found suitable to place. So that's how we are leveraging on this database, the 360-degree profile that we maintain on all the employees. And the second aspect which I would like to make very important, which is the performance management system that is going as part of this Prerna tool. So typically, I'm sure, see, most of the banks, it is a very subjective assessment of your annual performance. There are two problems. One is it's only at the year end, the employee has to be, assessed on the performance part of it. And that assessment which is going to happen at the end of the year is also very subjective assessment. So here we have done away with that, because what we saw as an outcome of this subjective assessment, that there is a particular band. So your 85% of employees, irrespective of what that performance has come from that unit, are getting rated around that band. So we don't know actually who are the top performers in the organization, who are the below performers, and what we need to do to look at this issue. So performance should be not subjective. Performance should be very, very objective. To the extent it can be made scientifically done and objectively done, it will help the organization. So that was the thought process behind, and for that matter, what we did, there are roles which are clearly defined. So there are key responsibility areas, and those KRAs have been allotted to the employee, individual employees, and they are measurable parameters. So measurable parameters today we have achieved we started off with 70-30. So for every employee, there is a 70% which is a measurable parameter, and the system will auto-populate the performance against what the expected outcome was from the employee, and the scoring will be given by the PMS tool for the 70% weightage. For the remaining 30%, it is the supervisor, but there also supervisor will not use entirely his or her discretion. They have been given an overall guidance that 10% goes towards the behavioral aspects, and that's how it is. And this year we have going ahead with stabilizing the process, stabilizing the system in the bank. Now we are moved to 75-25. So what we are finding that this objective assessment of our employees is actually able to tell us exactly who are the performers, who are the non-performers. Also, it is bringing in a culture of performance, because the employee knows now that these are the parameters on which my performance has to be rated. If I need to score well in the annual ratings, I need to perform on these parameters. So somehow those initiatives, we are able to get better productivity from the existing set of employees. And yes, we do realize system is not so easy said as can be implemented, because there are employees who are working in different setups. There are in branches, within the branches there are various geographies, the various categories. So what we have done to address the issue, we have around 300 plus cohorts where these the officer who is posted in a rural branch will be compared to an officer who is posted in a rural branch. So one cohort is that. So like that, we have been able to identify from the admin offices, from the branch field functionaries, almost 300 plus one cohorts, and that's how we are able to rank them and rate them.
Fantastic. No, thank you for that. And again, some very, very powerful lessons there. I mean, both in terms of making that upfront investment and getting your data hygiene in place, because that's really step 0 in this, or step 1 in this journey towards a more data-driven HR function. And two, in this entire use case of performance management and taking that to internal mobility, capability development in itself is powerful. And on that note, I'll actually turn to Mr. Kalyan Kumar from PNB, because PNB, as some of you may know, has last year embarked on an HR transformation journey, which was really called Project Udaan. And two important facets of Project Udaan were around capacity and capability building for the future and performance management in the bank. So would be interesting to hear your thoughts, sir, on the journey and lessons learned from it.
Thank you, Nitin. Good morning. Hope I am audible. First of all, I thank IBA and Deloitte for organizing this wonderful event and inviting me also here. And I will say the concept is also very, very relevant and appropriate. In that direction, before me, all the speakers have spoken about various facets of use of technology in HR. Here, I will like to start, actually, first what we understand about HR. First, actually, this concept, if it is clear and how it is appropriate in current ecosystem, then it will be, actually, I will be able to say you about how these transformations are going to support. Overall, we all are business organizations. We mean business. For that purpose, in this disruptive time, we have seen that there are a lot of changes in business models. And those business models actually puts customers at center place. Then customers understand us from the employee's perspective. Whether our employees are ready to take on the changes or disruptions or not, that is the biggest question. And all these technological interventions and everything, whether these are taking care of those current requirements or not, that is the, I will say, the biggest challenge in front of all of us, all business organizations. In that direction, about HR, actually our knowledge, most knowledge are limited to the traditional business, supporting traditional part like paying salary, paying LFC, doing recruitment, promotions, transfers. These things are, we mostly understand that these are the major roles of HR. And we digitize it, and our employees' experience is also very good. Because earlier it used to take time. Now due to this use of technology, their experience is good and they feel happy. But whether this is actually completing the whole picture or supporting us or not, that again I am placing in front of you all. In that direction, the use of technology to meet the aspiration of any organization, What I mean, the larger vision of the organization, whether it is supporting or not. In that direction, rightly said by Nitin, that previous year we have started Project Udan in Punjab National Bank. We are having 100,000 plus employee base and 130-year-old organization where really it is a very challenging job to implement such a end-to-end HR transformation at this scale. In that direction, there are two aspects of it, major aspects. One is performance management system and another is capability building, which I will focusing upon mainly. In performance management system, my predecessor Nidhu has already actually spoken a lot, and that part is also implemented, because bringing objectivity and also comparison in cohorts actually will trigger performance culture in the organization, and capturing both also providing equal playing field to the employee, because persons working at administrative office where more subjectivity is there and persons working in field where more objectivity is there, providing them playing field is challenge. Though we have captured those things also objectively and tried to capture those things, but still quality of data point is also very important. That is also very challenging. This is first step, bringing objectivity in performance system so that management is aware who is performing, who is not performing. So that suppose if someone is not able to perform, then what is the role of the management? How to nurture those talents, how to build upon those capabilities. That is the biggest challenge. That Nitin, you told about capability building, there actually from the officers level when they get onboarded into the organization, we are having training for 52 weeks training program for them, which includes classroom training and also on the job training, so that in complete 1 year, that officer, once he is onboarded, he is actually aware about all the diversified aspects of the banking. Then thereafter they work in the branches, and after completion of 4 years, in 5th year we provide them job families. We have classified job families because these days banking is very diversified and very aspirational, because digitization, in credit assessment also, and so many things are actually required now. In a structured way, those job families, all learning and development activities are actually aligned to that particular job family. And also, as per bank's requirement, we decide, suppose for credit, next 5 years we require 2,000 people, for Forex we require 1,000 people. In that way, targeted skill building we are doing. There it will be very worth to mention here, we have done skill gap analysis of our top management, at least AGM and above we have done, and we have to replicate it to lower level also. Our aim is to move to the grooming and development at individual level, so that customized grooming plan can be prepared. And after job family, once an officer reaches to skill 4 level, that is 12 to 13 year of experience, then we have provided them a leadership development program. That tagline you will like to hear, developing the best version of you. I understand this is the core aspect of HR, to develop, to support you, to give you an environment where you can give your best to the organization. To create that ecosystem, we have provided training to 931 plus AGM and above executives, and now this third forum is going on. Actually, it is about, first forum is about leading self. A leader must understand self, and thereafter, after 2 day session, we provide them a one-on-one coaching for 90 minute session, and there are cognitive ability tests and different type of assessment tests, and they get their IDP developed, and through coaching, they are having certain action points to implement on them. For second session, leading team, there they learn how to behave in a team, how to nurture a team, again followed by one-on-one coaching. And third is leading transformation. There they learn about how to become a role model, so that a leader is always a role model. In this structured format, again we provide them one-on-one coaching. And worth mentioning here is, all these things are captured through digital tools. In PMS we are having 8 digital tools, and in capability building we are having 6 digital tools. Because if you are managing such a large activities, we can't do justice if we do it manually. The technology has very important role to play, and technology also bring absolute transparency, I will say, in this process. And I will say the feedback and impact, we have observed good amount of synergy among top management, and certainly that is reflected into the organization's result also, that you can correlate, and due to these activities, change management was the biggest challenge which faced, and now also we are facing. In that direction also, very structured way, first we conducted top management meeting where we deliberated upon this so that buy-in from top management or senior management is there. Thereafter, we conducted number of town halls, and we are having more than 300 Udan ambassadors, we call them. Those who are working at several circle offices, zonal offices, and we are interacting with them at frequent intervals, quarterly level. And in that way, we are disseminating and sharing all the change management kind of thing. And in the initial, only I have told, PNB being a very traditional kind of bank, having 130 years of legacy, really it is a challenging work to get such kind of transformation events getting implemented. But I am very happy to share, I am getting very good signals from my senior management, and also during town hall meetings when we interact, these are having very good impact in those directions. And in a very targeted way, we are actually working on skill building that will certainly take our organization to greater heights. Thank you, Nitin.
Thank you for that, Mr. Kalyan. And I think a couple of interesting takeaways there is, one, don't lose sight of the future and the fact that HR has a big role to play in future proofing the organization from a capacity and capability perspective, and technology will be an important enabler of that vision. And the second is again change management, and we often tell our clients this, that you've invested a lot in the ERP or the HRMS. The journey does not stop at go live. In fact, go live is actually the beginning of the journey, because how do you actually change mindsets to actually adopt these systems and use them in both letter and spirit, right? So don't underestimate the challenge when it comes to change management, whether you're a private or a public sector bank. But I'll now move to again Vinay and ask a wider question, because in all of this you need obviously cutting edge technology talent to fuel your organizations. And Vinay, of course, you've led HR functions in some iconic consumer companies, telecom companies. What's your perception today of banking's perception as an employer, right? I mean, talking about banking sector, and what steps can the industry take to attract this cutting edge talent? Because now you're competing with the likes of not only other banks and fintechs, but even the likes of a Microsoft or a Meta or Apple or Google and the likes.
So I spent 30 years in other sectors before I joined, or it was my good fortune to join financial sector. Banking is tough, so let me tell you that upfront, after spending 5 years in this sector, it's not easy to be part of this sector, both from governance point of view as well as from regulatory point of view, and the sheer scale and spread of the organizations. I mean, we all heard all organizations are of a certain size and scale. Other sectors tend to go through cycles which are, increasingly becoming shorter. So telecom at one point in time used to attract the best of FMCG talent, which was the, storehouse of talent, and then it's, had its day, and now it's in a different situation. I think India, fortunately, from that point of view, from a talent availability point of view, is pretty robust. You have lots of people, the demographics favor us as a country, the availability of high quality talent, young talent is available. Question is for organizations, how can you leverage them? How do you, allow them to, as was rightly said by my co-panelists here, how do you allow them atmosphere, and how do you allow them ecosystem which they can thrive? I think my wish list, if you were to ask me, is to have a tech landscape that allows a self journey of a person to happen, both from a development point of view, both from self-assessment point of view, knowing what are your strengths, and having an internal talent marketplace in which I am able to navigate my journey. If you're able to do that, that is one side of the story. But also, I think from the input side, it it's a moot question to ask whether there could be some industry-wide initiatives to get talent at the entry level organized. You know, we have Future Banker program with Manipal, ICICI has, some of the other organizations also have. But if you see the scale and the growth drivers which are in place for the economy at large, and it has to be on the back of the financial sector, first of all, then your talent requirements will be far bigger, you know. So if there are ways of addressing that for sectorally as well as for big organizations, I think that is the starting point. Rest is to really create a self-intuitive kind of a tech-enabled journey in which a person is able to reach out and pull whatever inputs he or she requires and is able to navigate their careers, you know. And ultimately, you know, you could have all people happy, but if I'm not happy as an employee, then I'm not happy. That's it. So I'll look for some other job somewhere or leave or do whatever I want to. So how do you make it work for each individual? And for that, you just cannot take ownership as a large organization that I'm here to make sure your career aspirations get fulfilled, because people's preferences change. They want to do different things at different points in time in their careers. So I think the more we make it self-enabled, I think that's the way to go.
Oh, fair. Thank you, Vinay. Fascinating, because that actually makes a perfect segue for my next question to Srirang. And Srirang, you know, what we saw in the industry was that when it came to job rotation, specifically cross-functional, one could say that public sector banks were actually ahead of the curve. They were early adopters of moving talent across various functions, departments, roles, and, you know, creating that grooming. And then, of course, ICICI has been very robustly embarked on that journey itself. Can you tell us a bit about that? What are the upsides you've seen? What are the challenges you've seen, and has technology played a role in enabling that?
Sure. No, I think, so first of all, Nitin, it's a very good question, because I was hearing some of our senior colleagues from the PSU banks talking about the changes in performance management systems. And, you know, and I think there are different views to it in the first place. This whole search for objectivity sometimes can also lead to mediocrity. Right? So that's a separate panel discussion that you should probably have on another day, because metrics itself, unfortunately, is what we believe is objectivity, and then metric management is one of the unintended consequences, and that's something that one should really watch out for. The other beautiful, I think, process that public sector banks have instituted so well is how they really groom talent by moving people across various verticals. There are various models available. You have on the other extreme, you have a lot of multinational banks where you kind of work in a particular silo for many years, and deep specialization gets built. So I don't think there is one size fit all for all these strategies, but for sure at ICICI Bank, we have also believed that rotating people is extremely important, and it's a business case for us. We do it because I think it has added value to us. It brings fresh perspectives, because all said and done, when you run a certain function for a period of time, there is some amount of, I would say, you fall in love with certain processes and certain ways of doing things. And how do you challenge it? Now, one option is to get people from outside. But I think the advantage we have is we have people who are within the corporation, who are culturally aligned, but are in a way insiders and outsiders to that function. So when you move people to that function, we have often found them going and questioning, challenging, and adding value and building on what has already been built in the corporation. So I think we have really valued it. It's not easy, because often in PSU banks, I think it is an established process. Whereas in private sector banks, after all, it's a choice you make. So there is certain amount of risk, so to say, when people move from one position to another position. But I think it's not an issue at all. So for us, it has benefited immensely in adding business value. It also builds very strong succession for us at various positions at leadership level, because you have people who have seen multiple functions. That said, the only limited caution, and that's, you will see, is probably the flavor of what I say in most points, is any extreme here can have unintended consequences which are very sharp. So when I say generalization, I obviously mean generalization of most functions. And there could be functions like deep technology skill. There could be certain points in risk analytics. There could be some positions, let's say in trading or prop trading, which may not be amenable or legal. So if you stretch it too far, which I suspect in some public sector organizations they do, then you kind of also lead to a set of challenges. But complete siloed based growth also I think leads to extremely narrow thinking and builds a very, very sharp organization. So we have benefited from it. Technology certainly, as I mentioned, because when you move people from one function to another function, how do you transfer knowledge? I think that really technology has played an important role in making people, skilling people as they move from function to function.
Right. No, and thank you for that, Srirang, because the careful nuance here is, some functions by virtue of the nature of the job, they just require that in-depth expertise, and that may not change. A machine learning specialist is a machine learning specialist.
Maybe.
So that nuance has to be kept in mind. I'm mindful of time now because we are nearly up, but just a couple of quick closing questions, and I'll move to again Mr. Kalyan. You've when you look at HR and this quintessential dialogue about how HR can be a strategic business partner. How has you talked about Project Udaan in the context of capacity building, capability building, but what are the steps you are taking for again integrating your the learnings from Udaan with the sort of wider applications around succession, around talent, around job person matching, transfers? Are there steps the bank has taken in that direction?
Though a clock has shown, but I will be very brief, I assure you.
Sure.
You rightly said HR is always a strategic business partner and rather business enabler. Through that perspective, we see then most important part is putting right person at right place and also preparing people for taking that position. In that direction, we have developed one succession planning tool. We have identified critical roles and critical functions, both behavioral and functional part. We are capturing through digital tools through that different process, which I have told during my initial remark. Based upon that, we are having sufficient data available so that from AGM level itself, we can groom them to take the critical positions of the bank, which aligning with the aim or vision of the bank. In that direction, in a very structured approach, we are preparing people from AGM level to take all the critical roles, not only limited to the bank, but to the banking industry. That is role model which can be showcased and seen, which we have implemented at Punjab National Bank. I am in conscious of time. I am stopping here. Thank you.
All right. No, sir, thank you for that. And again, succession planning, the business case is obvious. Your boards are asking these questions. Your regulator is asking these questions. So if technology can help build more robustness around it, then absolutely a compelling case for that. But again, we are up for time. So I'd just like to extend, again, a big vote of thanks to the esteemed panel over here. Very insightful discussion. I honestly didn't realize how 45 minutes went by. It was a pleasure and a privilege. So thank you all once again, and thank you to the audience as well.
Thank you to all distinguished panelists on sharing your deep insights and adding immense value to the discussion on chosen topic. May I request Shri Nitin Razdan to felicitate panelists by presenting a memento, please? through the second panel discussion on one of the most interesting topic, which is incentive to drive superior customer experience. It's my privilege to invite on stage the panel speakers for the current session. Shri Ashok Chandra, Executive Director, Canara Bank, and he heads the HR vertical as a part of his role. Shri Vibhash Naik, Chief Human Resource Officer, HDFC Life. Professor Dr. Zubin Mulla from Tata Institute of Social Service. Prior to the academic work field, Dr. Mulla holds experience in engineering, designing, and management consulting. Shri Shishir K. Mishra, Secretary, Financial Services Institute Bureau. He has experience of working in various departments of Reserve Bank of India. Can we have a round of applause to welcome the panelists, please? Thank you. And of course, Shri Anandorup Ghose, Partner Deloitte, our moderator for the session, please. Thank you, sir. Over to you.
Thanks. Thank you. I hope this is working, right? Okay, great. So first of all, thank you for staying back in the room. I understand that it was after a panel discussion that lasted 45-47 minutes for you to stay back and listen to us. That indeed is a privilege. And thank you everybody for also joining us here today.
Thank you.
As you would have noticed, we have a very interesting constitution of this panel. We have an academician, a regulator, someone representing private sector and someone representing public sector. I think that's a very interesting sort of a mix for a topic that also requires this kind of a conversation to happen. We were talking about the role of incentives, and while to a large extent the discussion is based around customer experience, we're also going to be broadening it a little bit and talk about incentives in principle, in general, in its application, in its outcomes and so on. So without wasting much time, sorry, before I start, I also wanted to request the panelists. We have 44 minutes now, so I might sometimes cut you short, so please don't mind that. And what we'll try and do also is that somewhere during the course of this panel, we'll also open it up for questions from all of you. I'll start off with you, Professor Mulla. I know you've done a lot of research in this area as well, but incentives, to what extent do they necessarily drive performance, or also sometimes crowd out any motivation, intrinsic motivation that people might have to do this?
Okay, am I audible?
Yes.
So, thank you, Andy, for the question. There is no doubt that incentives drive performance, and there are several reasons why they do. Apart from the fact that people want to earn more, there is also the fact that people start focusing on a certain target. And the fact that they're focusing on something itself will drive the energy in a particular direction. And there's also a kind of feedback that they get on their performance on a regular basis when they're tracking something for which they are incentivized. So there's no doubt that it drives performance. This thing about, extrinsic motivation, intrinsic motivation being seen as opposites, I think it's one big myth. And it started off with an experiment which was done on school children when they were doing things like painting and other art and craft activities. And subsequent to that, there have been several studies on real people doing real work. And those findings have frankly been rejected. Because most of the work we do is not like art and craft, which is always intrinsically enjoyable. So I think we should stop looking at extrinsic measures and intrinsic measures as opposites. In fact, if we look at our own experience, we do things for multiple reasons. We do things which we enjoy, and the same things also give us rewards. So I don't think we should look at it as opposing things. Having said that, it's also important to look at what is the perception of the employee about that incentive that is being given. Is it being perceived as controlling, or is it being seen as feedback on their performance? And that is where the leadership and the cultural role has to be reinforced. So if we keep communicating that the incentive is a cause of your behavior and not a consequence of your behavior, then we will have a problem on our hands. The challenge for leadership is to keep communicating that the incentive is a consequence but not a cause of your behavior. You're doing it because you're part of the organization, you love the organization, you want to do it, and there will be consequences at the end when the rewards have to be distributed. Those who have done better will get more. I think that's where the leadership piece comes in.
Interesting. I have not heard this phrase before, consequence and cause. As a consultant, definitely I'll use it somewhere or the other. Mr. Chandra, from your perspective, you come from an institution where you haven't necessarily applied incentives in as much extent as private sector would have. But what role do you see incentives can or have played in customer service at least?
Yeah. Good morning. I think I'm audible. Good morning to all of you. First of all,
Yeah, you can use this one. I think it's working.
It's working now.
So good morning to all of you. I am very thankful to IBA and the Deloitte team for giving me this opportunity for this very, very interesting session, and very, very close to my heart also. So now before coming to the incentive part, I will just share some personal experience. I think most of you also would have experienced this in your life. Just very interesting experience. Say for example, if you are getting down at the Mumbai airport and you have the prepaid taxi coupon and you are waiting for the taxi to come and you are residing in Bandra. Now one taxi person comes and he's sitting inside and you have one luggage. He's sitting inside and you are opening your door and keeping your luggage inside the dicky. And see, once you have taken the prepaid taxi, your aim is that from Mumbai airport you should reach that destination, the Bandra. That is your purpose. Now that taxi person that does the same thing. He takes you from that airport to the Bandra location. Now there is a second experience. I think most of you would have that. You are waiting for the taxi to come. This taxi person comes out, greets you, opens the door for you, takes the luggage and keeps it in the dicky, and again takes you to your destination, gives a warm reception at the end, and the entire destination gets over now. Now, how do you see this experience, second experience? There is another very, very third experience which we are talking about here is, the taxi person comes out, greets you, takes your luggage, keeps it in the dicky, opens the door for you, welcomes you, takes you to your destination, and then he asks you, sir, what floor you reside. If you say that I am residing at the second floor, takes your luggage and keeps you at the door. And then, before leaving, he tells you that, sir, whenever you have the taxi requirement, this is my number, this is my name, and next time, whenever you get that opportunity, please call me. Now, there are three instances. When you have purchased the taxi coupon, your aim is that from airport to the destination you should cover. All the three people, they have done the same thing. Now, how this experience evolves now, and how do you see from one experience to the third experience? I think all of us, we are talking about the third experience. That is the customer experience which all of you are talking about, and that we call it is a delight experience. Nowadays, we call it as a wow experience. Now, how we can create that sort of wow experience in the banking parlance? Can we create the experience of the personalization? I think in this present circumstances, the taxi driver has created the personalized experience, unique experience. I feel myself very happy that he has given that sort of service which was not expected out of that. So these are the things which we are talking about in the banking parlance when we are talking about the customer experience. Now then it comes out that how you can motivate our people in the banking system so that they can give the wow experience to the customers. Now, as Mr. Mulla mentioned, that monetary part or non-monetary part, what I feel, and in fact I have gone through so many studies also, see, to a limited extent, the monetary part can play a role. But today, in the banking, all of us have the roti, kapda and makan. All of us is enjoying those things now. Today, what we require is the respect and regard in the system. Monetary part can play a very, very limited role to extent that it can incite you, it can ignite you. But if you want to create a long-term gain out of that, I think you need to go beyond that monetary concept. You need to see that how my employees are respected and regarded in the organization. What sort of transparency I have brought it in the system. What sort of process change we have brought it in the system. That plays an important role when we are talking about the employees' incentive. It is not only the monetary system. Whether we have changed the processes where the employee feel incentivized that my role and responsibilities has become very, very intrinsic, and I am becoming a part of the system where I can provide the excellent service to the customer. Now, if you think of the old age system where you take 1 day in opening that account, now what sort of customer experience and what sort of incentive you can give it to the employees? So unless and until we work on the non-incentive part to get the desired result in the long run, I think your incentive will not play a very, very important role. And second very important thing which I would like to share, when we are designing any incentive or monetary part, we need to be very, very clear about ourselves that what sort of behavior changes and behavior thing which we are going to put it in the place now. It should not happen that we are creating the incentive system in the bank and people in the system, they start working for that only to get that monetary incentive. Then it starts that mis-selling and it will create a lot of issues in the system now.
Absolutely.
So I think what I feel that for intrinsic motivation is a very, very important thing. And for that, I think entire ecosystem we have to create in the banking environment.
And that's the brilliance of this panel. Now we have two completely different perspectives on the table here.
But on a lighter note, I think if my ride doesn't get cancelled, I think that gives me great experience.
But Vibhash, to your question then, you've had incentives for a long period of time and you've seen this happen. But and on the customer experience perspective, it's usually an input, right? And you very rarely, I'm guessing, get a direct response like this taxi example would have had. So how do you balance that? Because customer experience is input metric, incentives are more outcomes.
Okay. See, incentives help you drive behaviors, okay? And there are lots of expectations that you have from employees. But if you want to accentuate certain behaviors, incentive helps you basically bring it to the forefront. At the junior level, okay, the incentive plans are mostly quite short-term in nature. At the senior levels, in the KPIs, you have certain, related to customers, the weightage is significantly higher. And most of these KPIs are more medium-term to long-term in nature. The expectation is that the leaders drive behaviors for people, for their teams, or for the organization. So, having different types of KPIs for senior, middle, junior, that's how you're able to kind of, drive certain behaviors within the organization, and that's what we have been doing in HDFC Life.
Interesting. And Mr. Mishra, from your perspective, you've seen the regulatory side of things. And like Mr. Chandra said, there are challenges with regard to what an incentive might drive. So from a regulator's perspective, what are factors that concern you when you look at incentives, particularly in financial services?
Yeah. Good morning. So before that, thanks to IBA and Deloitte for inviting me for this and giving this opportunity to talk to all of you. Before replying this, there is a concept, there is a earlier concept why we are talking on this, on the incentives and the bank's incentive parts. It was not there before 2010. It came up after 2011-12. This particular issue of a regulator or each country regulator looking into the incentives given to the bankers. The very basic root is global financial crisis. And the background of banks like Lehman Brothers, there is a LIBOR setting trend that was also scandalous. These things led to the international people, say basically FSB board, the Basel committee, they looked into it and they came up with the idea what actually led to all these activities. In a very simple words, in a very single word, they have defined it that a very higher proportion of incentives in a very shorter terms without adequately looking into the what is going to happen or the risk to the banking system in the long run. That means the type of performances given to a employee in a very short-term performances and its consequences in the long term. What will happen after 2 years, 3 years to the organizations because of the behavior of that particular employee? That's very important. This was also endorsed by G20 countries. That led to, in India, Reserve Bank of India came up with the circulars indicating all these things, setting a trend way back in 2012 November, and recently also in 2019 also they again modified their circulars. So in that they very clearly said to private sector banks, your small finance banks, payment banks, labs, and it was addressed to the CEOs, chief executive officers, board level members, as well as other people at the back office and in the controlling trend. They've defined it very clearly, they have defined it, what it should be, why it should be. The very basic trend of FSB, they say whatever proportionate amount of a reward should be given, it should be commensurate with the risk taken by an officers or the board level persons in the bank, and it should be adequately, it should be measured, it should be adequately checked by the HR system, it should be adequately checked by the NRC of the bank. They must report to this to the regulators on annual basis. So the regulator on annual basis, they have to approve this at the top level positions. The junior level positions will flow automatically. So there is a check and balance required. So that's a basic thing we came across. Now coming to this question, in the private sector banks and in public sector banks. Let us talk about the private sector banks in India. You can say that definitely, as my co-panelists say, any incentive leading to performances, that's fine. If we check the performances, we can divide into two parts. One is your fixed pay, one is your variable pay. We shouldn't talk about the fixed pay, we should talk about the variable pay. When we see into the variable pay, it can be divided again into long-term incentives, short-term incentives. Short-term incentives is a cash component, we can say PLIs. Long-term incentives, it can be said equity-linked schemes, various schemes of ESOPs that has been adopted by Indian banks time to time. Now in case of there is no issue from the regulator from this. Here, whatever the banks pay, they should adequately judge it. The risk taken by the officers, they must adequately record it. It should be approved by the board. And the people who are managing the NRCs should be properly selected. They should have a proper standing in the market. And ultimately, it has to be recorded by the regulator. They have to approve this. Now coming to public sector banks. Do we have really a performance-based incentive in public sector? The answer is big no. Only 3 years back, the government has approved PLI scheme in the public sector banks. What exactly is the PLI scheme in the public sector banks? It's a fixed pay. If your performance is, it's around 5 days or 10 days or 15 days of your basic salary based on the 5%, 10% or 15% and above your operating profit, right? So it's fixed for a bank. Say bank X, it will get 10 days salary. All the employees will get 10 days salary. Is it performance linked of individual? Answer is no. Whereas in private sector banks, answer is yes. It's linked to the performance. In public sector banks, it's still a fixed pay. If the bank is getting 15% and above operating profit, all the employees of the bank will get it accordingly, 15 days. But it's not valid for the board level positions. The board level of positions is fixed by the government. They fix once in a year, so they have a different parameters.
Yeah, actually,
so
on
the
the
other two.
Yeah. No, thank you for that. And it'll be good to hear the audience view questions around this as well and the points that you just raised. But Professor Mulla, from your perspective, what Mr. Mishra just described is a team performance structure, right? The bank performs, everybody makes money. What Vibhash was talking about was more individual, like individual different levels, different kind of metrics. In your experience or research, what do you think works better?
So I think the key factor that we need to look at is how much visible interdependence is there amongst people who are going to be looked at as a unit for rewarding. Now, as Mr. Mishra pointed out, the organization, at an organization level, you measure the operating profit and that determines the amount of variable pay. That would be a very broad measure. Now, when you have very broad measures, you are definitely measuring the right thing. That means you want the organization to have higher profitability, so you're measuring the right thing. And people will be moving towards profitability as a whole, including the top line, the bottom line, all the other parameters that will lead to profitability at the end of the year. The problem with that is that there is a tendency to free ride, because people do not see a clear line of sight between their work today and the broad measure, which is the organization-wide performance. And it requires tremendous effort on the part of the management to develop a culture of accountability where all individuals feel part of that very large collective. So that's a challenging thing. In most cases, it would need to be a smaller group, I would say. Having said that, if we go for narrow measures in the sense like we had in, for example, there was this case of Wells Fargo, where they incentivized number of new relationships opened, and the company went rogue, employees went rogue, trying to open accounts. In such cases, these are narrow measures. That means I am measured for something which I can immediately control. In that sense, there is a huge tendency of gaming the system, where you end up getting your incentive, but the overall organization misses out. Now there again, if you go in for narrow measures, you have clear line of sight, but you have problem of gaming. So there the recommendation is that we bring in a little more subjective elements. The best would be to have a mix of two, where you have a relatively broad measure coupled with a culture of accountability, have some narrow measures, but don't try to outsource your role as a supervisor to the incentive system. Try to keep some space for subjective measures. So you have tangible measures, but you also have some kind of subjective assessment where things which cannot be measured and cannot be rewarded are looked into by a senior manager. And that kind of ensures that we have the best of both worlds.
That's the what and the how that became a big part of the conversation post-2008 financial crisis. But Vibhash, to your point, or rather coming to you, you've seen also some private sector companies moving away from being more individual or even balance of team and individual to being a lot more about organization, the kind of structure that public sector banks might have. How do you see that panning out? What's your experience in that?
Again, adding to what I think the gentlemen were talking about, I think you need to, first and foremost, when you design incentive schemes, there's no one-size-fits-all solution for people across the board. Okay, and as I mentioned, the strategy needs to be different across levels. You need to have strong governance, first and foremost, around whatever scheme you've kind of designed. Also, I think you need to balance between your short-term and long-term objectives. If you design an incentive scheme or have a bonus scheme which is only short-term in nature, only to push certain behaviors and certain KPIs, then there is a possibility that you can game it. Or if you're doing it for people at the bottom of the chain because you want to drive certain behaviors in the short term, possibly at the middle level you have certain control, you would design another incentive scheme which controls the gaming that could possibly happen at the, at the junior most level, so on and so forth. So when you're looking at it in totality, you need to have these checks and balances which ensures that the gaming doesn't happen. I think that's the way to kind of look at an incentive scheme or a bonus scheme. Again, when you're looking at short term versus long term, cash versus ESOPs, in totality, I think in the organization you shouldn't have everyone doing the same thing and in the process possibly compromising some of the risks or long term objectives that you want to kind of achieve as an organization. If you're able to kind of balance it out, I think then you've got checks and balances and then it works in tandem. Like as I said, at the senior most levels, typically you would want people to focus on the medium term and long term as well. While at the junior most level, they may focus only on short term. Okay, so net, I think there is a balancing act that happens across the organization.
But would you, just on that point, would you also see functional differences in this?
Again, at the senior level, in most private organizations, your short-term bonus is dependent on achievement of the organizational objectives. And if your organizational KPIs or scorecard has got multiple elements which are a mix of short-term and long-term, I think the message is, if the organization does not meet its objective, irrespective of how good you are as an individual contributor, you will still not kind of make the money that you are expected to make. Right? So that's how you do it at the senior most levels. At the junior levels, if you're working on a strategic initiative or a large project, then you could possibly have a scenario wherein you say that, okay, based on achievement of certain milestones of that project, a bonus kitty gets decided, and then based on your performance in that project, if it's good, bad, ugly, accordingly, I think your kicker or, whatever, you will get paid. So, if you want to drive collaboration or team objectives, I think that's one way of basically designing your, your incentive schemes.
Mr. Chandra, I will come back to you on this one again. Lack of differentiation. I mean, like Mr. Mishra said, there isn't differentiation, right? He actually made a very bold statement. I don't know if, at least I felt, you said that there is no performance-based incentives in PSBs. So basically, I think the point is that individual differentiation is not there. You're paying on the performance of the bank. How do you see that playing out? Would you want to see more individual differentiation come in?
Yeah. See, to a larger context, if you see, there is no differentiation. But bank to bank, I think they can decide and they can do that. Like I will tell you about Canara Bank, what we are doing it. Yes, to a larger extent, it is based on the operating profit, what Mr. Mishra had mentioned, 5%, 10%, 15%. That is yearly what incentive you can give. But you can build a system within your organization that if there are performers, you can build a system of reward and recognition. And what I have seen now, I think that plays a very, very important role. Like I will tell you, see, today the employees in the organization, he wants a recognition. Whether at the top level, we are in a position to recognize that individual performance. And as I mentioned, it is not only about the monetary. Can we recognize them at a big forum? You have the customer meet. Can we call that gentleman in the branch and felicitate in the presence of all the customers? Now we have that annual strategic meet, and there we are inviting all the top performers with family. So now that again, it makes a very, very big difference. Now the individual, if he is a performer, within our organization, everybody knows that he is a performer. But whether his family knows that he is the hero, whether the son or the daughter knows that my father is a hero, my father is a star performer, my husband is the star performer. Can we recognize and can we build a system within the organization where we can invite those people at a forum and recognize those performers in presence of the family? And this we are doing it in this year, we have started that. And I'm seeing that the productivity has improved now. And you can have a very, very targeted approach also for that. Suppose in that particular segment in the organization, if you feel that things are not moving, your things are not growing, I think that particular activity, you can start that reward and recognition program where you can announce that whosoever the top performer will be there, I think they will be rewarded at some strategic good location with the family. So this is one way of doing it. Second thing, as I mentioned that again, today's generation is different now. I think the earlier panel also the discussion happened on the digital piece. Now, if my processes do not improve, if my the entire journey doesn't improve, I think we may not be able to bring out the result which we are expecting from the employee. Right. So, employee today expects that my entire journey has to be very, very smooth. It should be digital driven. So, there whether you give the cash award or not, your things will not improve. Your journey doesn't smooth now.
No,
third piece, what Mr. Mulla and Vibhash was talking about, the individual performance versus the team performance. Now in the banking parlance, if you see, it is the collective efforts of the people now. To some extent, yes, individual has to perform. I'll give you one example. Housing loan, suppose. Housing loan portfolio has to improve in the organization. Now you have the marketing officers whom you have given the target to bring that housing loan proposals. Now he brings the proposal. And if your processing officer takes 10 days for sanctioning it, now entire incentive scheme which you have built in, it will go haywire. So you have to see that my officer who is bringing the proposal has to bring it in the system and my processing officer delivers it at the targeted deadline and at a faster speed which all of you are expecting that. So from the sourcing of application to sanctioning until the disbursement, again the disbursement has to happen. If you are sanctioned the loan within 48 hours and if your disbursement takes another 1 week time, so again your entire process will not yield the desired result for which you are aiming now. So here the individual performance, like marketing of that has to be the individual performance based incentive. But from sourcing till the disbursement, now it becomes the collective efforts now, where everybody in the system has to play that important role. And then if it happens as per your deadline, that suppose in the organization you have fixed that within 48 hours I am going to sanction and disburse the housing loan. And if it happens during this process, then you should give the award to the entire people who are there in that particular system now. So this is the way I think in the banking parlance we need to design our incentive policy so that individual also should get awarded. And during the process, if it meets our desired requirement, I think everybody in the system should be recognized.
Actually, you raised an interesting point which we haven't discussed so far, but I just want to quickly get both of your points of view, and maybe starting with you, Professor Mulla, that this non-monetary incentive, recognition and those kinds of things, to what extent do you see that as a stronger motivator for organizations, for individuals?
So I think I endorse what Mr. Chandra has said. The thing about incentives is that you have certain predicted performance levels and those are linked up to incentives. When you look at performance beyond expectations, exemplary performance, which you could not even have anticipated that an individual employee or a group have gone through, I think recognition plays a huge role for that. And I think in a service environment, just as we've seen examples in hotel industry and other industries which are dealing with customers on an ongoing basis, there is a huge role for recognition for these exemplary performers. Here again, the devil is in the details. I'm not sure how they work, but it should not end up being a round robin scheme.
Yeah.
That this year you got.
That is
there
biggest.
should be some integrity in the process where people at a reasonably high level recognize what values, what behaviors are to be recognized. So what the difference between usually incentives are for outcomes, but recognition is for behavior. I think it has a huge role to play. But again, as I said, it's not an either or, both are there. I just want to add a small point. One should recognize that when we talk about salary and compensation, we are talking about human beings. And there's a social element there. And at the end of the year, if somebody has put in more effort, but does not see any tangible return, there is a sense of unfairness in the system. And that sense of unfairness can do more damage to intrinsic motivation than any other thing.
I think that's a big watch out.
Element which we need to keep
thank you for that. It's a big watch out for any such plans. Vibhash, your thoughts on?
I think I agree with him. It's not either or. So it's not like, if you want to drive certain behaviors, you only kind of design an incentive scheme and just stay with that. So reward and recognition and so many other things that go into driving certain behaviors. So it's never just one thing that will help you drive certain behaviors. So I completely agree. It has to be a mix of multiple things that will help you basically drive us and nurture that kind of culture within the organization.
So Mr. Mishra, from your perspective, you talked about ESOPs a little bit, but long-term incentives is something that's broadly not been adopted as much by public sector banks. What's your view in terms of the future of long-term incentives in PSBs? What are the sort of ways in which it can drive or create issues for the banks?
Yeah. So 2-3 things are here. One is definitely performances or incentives leading to performances. That's a basic motto. Second, let us keep in mind the largest bank in India, State Bank of India, say Canara Bank, Bank of Baroda and PNB, the balance sheet size, the business growth, the other mixed things, the performances and the amount paid here compared to the private sector banks. And all of us know, it's a thing to discuss. Now coming to your question, ESOPs as a long-term measure, only ESOP is a measure, that's the thing. Why it was not given or why maybe somebody has not thought to percolate down to public sector banks, there are several reasons. First of all, the government of India is the major shareholder and owner of public sector banks. Any sorts of structure you introduce, any ESOPs is going to dilute the structure. Third one is the type of performances we have seen from the public sector banks from 2017 to 2021. 2021 in form of NPAs, in form of other structures, that was problematic. Now coming to the scenario, the type of profits given by the public sector banks last year, it has crossed 1 lakh crore. Alone State Bank of India has contributed more than 50% of that. It's a historic. Maybe it can grow this year. So probably we have come to a stage where the banks are able to provide a better chunk of dividends to Government of India, and they are looking healthy now. Maybe due to a trinity, we can form a triangle, but at the top of it, we can say regulation, which sets the rule, supervision, which enforces the rule, third, the bank, which endorses and implements the rule. If these three things are performing perfectly, maybe it's a stage for introduction of ESOP. So some variant of ESOP which may be introduced, which can dilute very less from government stake, which appears to be quite safe. One factor is here. Just check the movement of share price movement of public sector banks vis-a-vis private sector banks in last few years. You can see there is a good movement of private sector banks last year. So if you incentivize somebody in terms of the, in case of the private sector banks, there is a benefit. However, we didn't see that type of trend till last year in case of public sector banks. But just see the share price of PNB, which was languishing at 35-36 rupees 1 year back. Yesterday it has hit 118-19. Just see the Bank of Maharashtra, around 10 rupees, and now see almost at 50 rupees level in a year, in a 2 years. So now they have also started performing. I mean to say the public sector banks share prices have started performing. All are doing well. So maybe some sorts of ESOPs, there are different variants of ESOPs, maybe some sorts of ESOP can be introduced, which will be quite helpful. Government will be quite comfortable for that because it will dilute less. It will be, RBI will be feel comfortable because they have a stake in it. They will feel comfortable also while doing the supervision and regulatory side. And provided it's backed by a proper HR policy, a proper NRC policy, and overall ecosystem in the bank improves. So I feel probably right stage have come, some sorts of policy can be introduced.
Thank you. And my last thing to you, Vibhash, you are an organization that has had a long-term incentive plan, ESOP variant for a long period of time. What would you advise the room here as they think about this and with public sector banks considering it as a watch outs when you're doing this?
See, the basic philosophy is you design a scorecard, you ensure that you've got the right set of KPIs in the scorecard, both short term, long term, as I said. If you achieve the scorecard, and fundamentally if you're doing good as an organization, then you're adding value to the shareholders. If you're adding value to the shareholders, the share price goes up. And if the share price goes up, obviously you're creating wealth for yourself. Okay? Or the converse is, if you're not adding value to the shareholders, then obviously your wealth is also at stake, or your salary is also at stake. Okay, and you will not be able to make money. So it's, in our case, for example, people did make good money only because, the company did well and it helped them basically create wealth for themselves. But the converse is, the share price is not always dependent only on the fundamental performance of the organization. There are certain external factors or there are certain overhangs in the market because of which the share price can go down. And in these kind of situations, the morale of employees within the organization kind of goes down. The other danger is when you have ESOPs, at the senior level, people are always hooked onto the share price. And every time, it goes up and down, the motivation levels of people within the organization kind of goes up and down. And especially when things are not in your control, people start to rationalize it, externalize it, and start talking about issues in terms of, why despite me doing well or the company doing well, our share price hasn't done well, because of which my wealth is now under, blah, 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 blah. So these are, it's a double-edged sword, honestly. It has its pluses, but it also has its own minuses.
Thank you. So actually,
and people want the best of both. So when it's doing good, I think people want ESOPs. When the share price is not doing good, everybody talks about having cash incentives and cash LTIPs and so so on and so forth. So, you know, it's at the end of the day, I think no one's very happy with what they have.
Wonderful. I have one last question for the panel, but it's a short one. But before I get to that, we have a couple of minutes here. Any questions from the audience for any of the panelists? Yes, ma'am.
So I want to ask Mr. Mulla a question. What I want to understand is there's a lot of youngsters joining the workforce these days. My question is regarding the reward and recognition part. Is there any data to say what is this young, the millennial or the Gen Z that we are talking about inclined towards? The tangible rewards or the recognition?
So I'm not sure. I've read some surveys, etc., by consultants. I think Andy may answer better. But it's something like tangible plus. So tangible is definitely needed. But on top of that, what people are looking for is more meaning and purpose. So there are studies talking about how your ESG initiatives and other such initiatives can enhance your employer brand. So that is something which seems to be a key distinction between the current generation and the past. But that does not necessarily mean that salary is not important. So that is also important, and meaning and purpose, what the organization does, what positions it takes on social issues is also becoming increasingly important.
So just to add to what he's saying, you'll see a lot of youngsters these days excited about joining startups or joining brands which are not necessarily huge or big. And possibly because I think they do something and there's meaning and purpose to what they do, and whatever they've done, it adds value to, so it makes them feel important. But that doesn't mean that, they're willing to do that despite the fact that they're getting paid below the market. So again, it's not either or. Meaning and purpose is something which is extremely important. If you believe that, you're just a cog in the wheel and just one small little speck in the overall scheme of things and getting paid well, I don't think it will hold the individual for long within the organization.
Thank you.
I will also just add to that. I think short term, definitely the young generation also, they are looking for the tangible. But there are a lot of studies internationally also, it has come out that long term, if you want to generate the activities and generate the interest in any organization, it is intangible. The tangible part doesn't work after a certain period.
Ma'am, I see a lot of young people in the room. You can do a short survey here as well. Sorry, any other questions? Okay, so if there are no other questions, then I'll come to all of you for one last thing from my end, which is give me a word or a phrase to complete the sentence, and I'll ask each of you. Maybe I'll start with you, Professor Mulla. Sustained and strong customer experience, the third driver example, is driven by dash.
Sustained and strong customer experience is driven by a well-designed reward system and a culture of accountability.
Vibhash?
Is driven by a strong culture within the organization around customer experience.
Interesting, no reward there. Okay, Mr. Chandra.
By intrinsic motivation.
Okay. It's a cultural ethos of the organization.
So with that, it's an interesting end to the discussion, because we started off on talking of incentives, we're talking of culture. Now, and I don't know which way to draw the line, but it's an interesting one because in our work as well, we've always seen that you could have the best incentives possible, the best structured, the most remunerative, whichever way it's possible, but how it's done and what it delivers and how it delivers, rather, the how of the delivery of incentives can often take the entire organization down, not just incentives or morale. With that, thank you very much for joining us on this panel, and thank you for being such a great audience. If some of you are around for a bit, maybe you can ask them at the breaks as well. Thank you very much for again.
Thank you. Thank you.
Thanks indeed to the distinguished panelists for such an enlightening discussion. May I request Mr. Ghose to present a memento to our panelists as a token of gratitude.
Thank you very much. Thank you.
Thank you once again,
Thanks,
all
sir.
dignitaries. Thank you so much, Mr. Shishir. Yes, it's a time to re-energize while having a hot cup of tea or coffee.